Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from fund manager Ausbil is CEO and Head of Equities, Paul Xiradis. Paul, welcome back.
Great to be back.
Now, Paul, the local market's been more volatile than most people can remember in a long time. What do you put this down to?
You're right. The market over the past 3 or 4 months has been very volatile. We saw the market being sold off quite aggressively in January and also in February, but recovered quite strongly in March. I think there was a lot of factors that were driving that. There was a fair bit of uncertainty surrounding the direction of interest rates just after Christmas and into the new year. Concern about the oil price, which collapsed during that period and also recovered quite strongly, and also concern generally about the health of the global economy, particularly out of China.
So, Paul, how does Ausbil manage this volatility?
Well, we're very active in our approach. I mean, we are a top-down manager and also a bottom-up. I mean, that's the way that we look at the world. We look at all the drivers which we think are important and likely to influence the market going forward over the coming 12-month period. And then we distill that down to what sectors are likely to be, which sectors are likely to be influenced from that outcome. And then from a bottom-up perspective, identify the best stocks which we think are likely to perform well in the coming period ahead.
Now, with reporting season over for the half, which sectors surprised?
Look, there was a few sectors which did surprise in the sense of their performance rather than the outcome. It was quite perverse, I think, this time round, where the sectors and stocks which delivered good outcomes didn't perform all that strongly, and those stocks and sectors which were performing poorly leading into it and delivered a bad outcome actually performed very strongly. I think the reason for that was that the market was positioned for a bad outcome for those stocks and sectors which were likely to underperform. Then that was reversed on the announcement of those results.
Oh, what about exposure to stocks with offshore earnings? How is that trade working out?
It has been certainly a winning outcome for a number of years, particularly with the Australian dollar adjusting to its lower level. That was thrown in a bit of question, I guess, in the last quarter because we did see the Australian dollar recover somewhat. And also a number of investors were pretty heavily exposed. But having said that, I think that some of the foreign earnings streams that are out there are still very strong and I think are likely to deliver pretty good results. So you need to be quite selective, and certainly that's how we are positioned here at Ausbil.
Now, Paul, what's your view on yield stock favourites like the big banks and Telstra?
Look, the banks have been under pressure for a good 12 months now. I mean, there's been a lot of issues surrounding the banks. I think a little bit overdone, but certainly they have been concerning the banks. We've seen a lot of international investors being quite negative towards our banking sector. They link property markets, downturns to China, to the banking sector. But the outcome is that if we have a residential slowdown, the banks do perform relatively well regardless because they are pretty well protected and they haven't been lending in areas where they are concerned about. Telstra has performed mixed, I guess, over the period. I mean, it's still a very strong yield stock. We are seeing competitors being far more aggressive in their space, but I do believe that Telstra still has a very strong and good proposition and also have pretty good earnings growth and also yield, so I think that will be quite supported. Where I am concerned about is there's been a lot of yield stocks which are running out of yield. And what I mean by that is that the price has been pushed up in a lot of these sectors where the yield has been contracted quite dramatically. So a traditional yield stock may not necessarily be a yield stock because the price is actually quite high at this point.
And now to performance. How did the fund perform over the medium to long term?
We've got a very good history of delivering our performance on a consistent basis, and certainly the last quarter and last year we've been able to deliver our performance. It has been quite a testing period, I must say, but we have been able to add value.
And finally, Paul, what's your outlook for the market going forward?
The outlook for the Australian market over the next 12 months, I think, has a number of challenges ahead of it. I do believe that the market still represents reasonably good value, certainly at these levels. But there is some issues that the market needs to be focused upon. One of the factors is global growth. I mean, how that's going to perform over the next 12 months. I do believe that growth will still remain relatively solid, so I think that will be a positive backdrop for equity markets. And generally speaking, there's still some rock solid good companies out there which will perform well regardless of the economic conditions, which we've identified, which we think are going to deliver strong outperformance. So we're reasonably optimistic, but obviously understand that there is some caution to be had.
Paul Xiradis, thanks for the update.
My pleasure, thank you.